Good afternoon, ladies and gentlemen. Welcome. I am the Crypto Crow. I want to try and do a faster video today, but cover some cool stuff. I don't know how long this will be, but it'll be interesting. I'm going to start off by looking at Bitcoin's price because, we're getting a little bit of a pullback, but I'm not overly concerned. And what I did recently, which there'll be a link in the description. It's free. You can use it, but I created a new indicator for Tradingview for those that are interested that paints the federal interest rates on the dates that they change. And so that you can go back in history and basically see what was the price movement as interest rates were changing, because it's just another part of what I'm trying to do to kind of better understand what's going on in the price action currently of Bitcoin now that interest rates are starting to come down, which that hasn't charted yet, the most recent interest rate. But when you look at the price, when I look at this indicator, it's pretty obvious that there's a really you can see this window here where the interest rates were basically a quarter of a point. And that was all the way back in March of 2020. And they stayed that way all the way until the markets crashed or started their dump, right? So from the point that interest rates changed, we had the second peak all the way up around 60. Well, it depends on the exchange. This is the overall index, but basically this is showing the average of Bitcoin's price getting to around $69,000 and then starting a very solid descent. Now, this is a weekly candle. These are weekly candles. But you can see that once we got to that first big pivot in Bitcoin's crash from the peak, interest rates went up half a point. Then they went up to 1.75%. As the price of Bitcoin continued to fall, the interest rates were continuing to climb. And so it's very interesting to see how that happened. And then, we got all the way up to 5.25%. Now, keep in mind, this is just the Fed rate. When you're getting a loan, the lenders are adding on top of that, several percentage points. And that's where you start negotiating your mortgage, where you can buy down the interest rate and you basically play with the lenders. So that's basically how these mortgage companies are making serious money. But anyway, that the Fed rate's at 5.5%, which typically means you're paying 7 to 8% for a mortgage at this point, depending on your program. Not everybody, but so you can see that peaked out at 5.5%, which is where we basically stayed for a little while, and now we got our first rate cut down to 5%. That hasn't printed yet, but anyway, if you're interested in this indicator to kind of add these types of things into your own analysis, you're more than welcome to do so. If we look at a lower time frame, I was kind of looking at what was happening in Bitcoin's price back in from 2017's peak all the way to present day to kind of look at similarities and things. And there are some interesting changes because I'm seeing not many, but I'm seeing a couple of different YouTubers out there that are saying, we're going to get major dumps and that we're going to get new lows. And I'm like, there's always one or two of those in every market. Typically guys that are trying to build engagement is how I look at it. They're just trying to be that outlier voice so that if they happen to be, they have nothing to lose, right? It draws attention. It gets people looking to see what they say, but their analysis are typically trash. They're better maybe in short-term trading and things, but then they try to make these big grand claims about what's happening with Bitcoin price, and they use metrics that aren't really relevant. They'll use like bear market indications in a bull market and try to, say, well, this is why we're going to dump because look, it dumped over here. The RSI, it's all silly. We're just not at that point. There's way too much going on in the world that is basically leading us into bigger market rallies to come, which is why I'm not overly concerned with where Bitcoin's price is and what's happening. But we're going to look at that a little bit. But you can see all the way back here, interest rates at this point were 1.5, right? And we got the pandemic announcement right here, and we got a big spike down, right? Everybody just freaked out. Oh my gosh, it's a pandemic. The market crashed. And, that's not common. But what I noticed too is that and I don't know if there's a correlation here, but we obviously got our first bottom here. We got our initial bear market peak, and then we got another crash basically with that announcement. Now, the question is, had COVID not happened, would it have become a 2 market peak? Because a part of me wonders how much of this breakup of the trend, this breakup of the momentum, like if we look at the 2017 market, we basically got one bottom, right? And you can see also where they kind of line up under the pi cycle trend lines, but we got basically one bottom, and then we rose up from there. But that was broken up by COVID, and so it really played with these indicators and threw everything kind of out of whack, which is how we ended up basically in a 2 peak cycle, as well as, of course, how I've discussed how the charting lined up identically to the NASDAQ of 2007, which I've explained that in multiple videos. But moving forward, you can see we've come under the orange pi cycle indicator line now twice in the bear market. And I would consider this our kind of our bear market, or our bear market peak, even though we've been in the bull market, because we bottomed all the way back out in November of 2022, and we've been moving up since then, which is basically the same thing we've done, like this would have been our November 22. Okay. And then we moved up into our first bull peak, as the market kind of moved in the bear peak. Sorry. And I feel like that's what we kind of got in March, but we reached a new all-time high before the halving. And that was because of the big inflows into these ETFs that were approved. So the sentiment has become very bullish. And I believe that to some extent, the trend has become accelerated because the ETFs have basically really pushed the market valuation much higher, much quicker. But at the same time, we can see the birth of the pi cycle indicator around this point was significant, but it narrowed much quicker after the pandemic announcement, and things got tossed out of whack. So we had that big wide berth here, but we're not getting that. We haven't seen anything that's going to drive the market down in significant ways and so forth. And so this pi cycle is really starting to narrow. And if I were to, map this out of when the crossover might be, that could honestly change. But even if I were to eyeball this, you could say somewhere September, October. And what's interesting is that lines up. If you've seen my previous video, an October peak, as much as that sucks, it does kind of line up with the time frames between the halvings and the peak and all of the different ways you can calculate it. If we look at Cardano, which got really nice pumps all the way up to 41 cents, but as it got closer to this area, you can see there's a lot of bearish liquidity sitting up between the 41 cent and 43 cent area, and 21.65 million. So that is going to be something that we're going to have to chip away at. But we've also seen below how we can really tear through bearish liquidity in a market when Cardano wants to, and it really isn't as dramatic or time consuming as we sometimes think. So that it is what it is. But we're currently, you can see how we're basically wicking down at the base of this 37 cent bearish liquidity profile here. And then it starts to get bullish the further down you go. So even at 35 cents, it's more bullish than anything. So I'm not overly concerned, because honestly, I can see us, I see us turning around. I'm going to hazard a guess and say that this downward trend, both in Bitcoin at 63.5 and Cardano at 38 cents, I'm going to suggest that we probably reverse on this by Wednesday. That's my guess. And we're heading into October. October should be very bullish. I think this is a basically a pre-October correction before we get an upswell into potentially new all-time highs. That's just my guess. we'll see how that plays out. But I did post about my indicator here. I created it using AI. Pretty simple. It's free. I'm not charging anything. It's just another potentially useful tool. And hopefully it helps maybe get my name out a little bit more and more subscribers on my YouTube channel. Duo9 on Twitter. I found his posts on Twitter very interesting. And he basically talks a bit about it took me 10 years in crypto to learn this. This is part 2 to a 2-part kind of a breakdown. And you should check it out. It's an interesting perspective on things that I actually happen to agree with. I'm going to read some of this. Altcoins are highly extractive. VCs print tokens from thin air with a cost basis of 0. When there is any demand for their token, they sell and absorb that demand. This is how they take your money legally. This is also why your blue chip alt didn't make a new all-time high. Basically, because the VCs make more money by creating, pet rocks or whatever, pump the value of those, sell into the liquidity of that, and then move on to other shit. And that's basically how they rinse and repeat that at the expense of the more fundamentally sound altcoins. But I do believe it's temporary. VCs don't care about their token price. As long as there is any retail demand, they can sell into it at a profit. That includes tokens down by 90 to 99%. Remember, their cost basis is 0. While retail waits for new highs or buys discounts, VCs laugh at you. See XRP. I have been seeing a lot of stuff recently about XRP, though. I might end up doing kind of a deep dive video about XRP in the near future. I went ahead and I picked up some more. So maybe the VCs are laughing at me, but I think that there's a lot going on under the radar. So we'll see. In crypto, the product is the token. In 99% of cases, there are no fundamentals. It's all a smokescreen. Anything except Bitcoin or stable coins are meme coins. Now, this I definitely disagree with to a large extent. Cardano is far from a meme coin. There are a lot of layer 1 blockchains out there that are far from meme coins, and they have strong fundamentals. I feel honestly that Cardano is one of the biggest ones. But it is what it is. I get what he's trying to say. At least proper meme coins are honest about what they are. I do believe that to some extent, meme coins today are the ICO tokens of yesterday. That's what I think. And it is more honest to the extent that, a lot of these ICO projects were trash, but they were all built and marketed based off of the speculative idea that they were going to change or disrupt markets. And a lot of us got really hyped about it, man. I mean, we all thought, hey, this is the new, this is the new technology that's going to alter the way everybody lives. We were just all under the impression that it was going to happen over the next 6 months to a year. Right. And so a lot of us got caught up in that hype and that FOMO. And now we've learned through multiple cycles since 2017 what the reality really is. And we've all learned so many valuable lessons. And I know I've learned a lot, which is one of the major reasons why I've become very much more risk averse to things and focus primarily on fundamentals that have proven themselves through multiple markets, not just, the next, like the craze right now. It's like, oh, real world assets or AI tokens, and everybody's pumping these things. It's basically 2017 all over again. And the majority of these projects that are getting pumped by influencers and things likely aren't going to last beyond this cycle. And then we're going to rinse, shake the Etch-a-Sketch, and repeat, and the cream will have risen to the top and become active again while they're building through the next build market after 2025. But that's, the speculation game is powerful. The meme coin super cycle is here. People are waking up and choosing dog whiff hat versus the VC backed AI coin that will revolutionize the world. I mean, there you go. That's exactly what I'm talking about. Memes pump hard because there are less VCs to absorb that buy pressure. Hence, community-driven memes will thrive. That's because, honestly, they start these things, they fund the marketing for them, and then they just sell into the buy pressure that they create, move on to the next one. It's a rinse and repeat thing. That's why there's millions of these meme coins out there. Altcoins never really die. They just slowly disappear in people's memory as their price forever approaches 0. A good example is EOS. A dead chain with an $800 million market cap today. 99% of altcoins will reach the same place given enough time. Do not hold them too long. And I do believe that this is true also to an extent. The problem is that when nobody's using or trading or doing anything in an ecosystem at all, that market cap can just stay where it's at because people aren't selling into anything because there's no demand to sell. So it just sits idle. And so, yeah, it is what it is. Ethereum will one day lose its number 2 spot. That's because Ethereum is like a phone app. It's software. If Ethereum does not stay competitive, it will end up like MySpace, or is it more like Facebook? Very good points here. Decentralization has been corrupted for profits. In the process, the pillars of crypto were eroded. See Solana. Profit is king, not decentralization, privacy, or cryptography. However, smart money puts their wealth and profits in Bitcoin. Never forget that. And that's true. And then, of course, it's almost like a meme now. The Solana network is temporarily down. It's not a dig. This isn't about Solana. The market is changing and maturing. The proliferation of scams, extractive projects, and VCs is bringing back into focus the fundamentals set by Satoshi. Well, that in itself is a big bullish sentiment towards Cardano, because Cardano is as close to Bitcoin as you can get while offering smart contracts, and all the other benefits associated with Cardano. So, I'm telling you, folks, I really do believe that Cardano is going to, I think it's going to wake a lot of people up. I mean, the speculative model that is Bitcoin and cryptocurrencies, altcoins, meme coins, all of this stuff, it's all fun and games. But I think ultimately, I just did a big write-up on my Substack talking about Cardano and a lot of this stuff. And I referenced some of this stuff in that write-up. It was pretty long. And I just think that the times are really going to start changing rapidly because, like I've said multiple times now for quite a while, we've been in the infancy of blockchain for some time. And I think that infancy is starting to change. Like, we're starting to walk, talk, and some are starting to run. It's just taken a little while longer. I almost look at, if you want to compare it to like infancy, I can look at Cardano as kind of like, call it what you will, a child that just refuses to speak until later in life, and you're always trying to get it to talk, always trying to get it. Oh, come on, Billy, say your first word. And the kid's like older than everyone else. All these other kids are talking. And then he starts to talk, and then he just doesn't shut up, right? Have you heard those stories? That's kind of how I look at Cardano. And we're just getting to the point now where Cardano is going to start really talking, and then you're not going to be able to shut it up. I believe it's going to be everywhere. And I did post recently on Twitter basically saying something to the effect of, like, I gave an example because everybody's talking about the treasury and how all of that's going to work. And I posted this, Dovemain. How many of you care about this? Do you have any idea what this is? No, right? You have no idea. Dovemain, maybe it sounds cool. I don't know, but not enough to really dive into it or try and dig it up and find anything about it. And I basically said, tell me what this is and why you care. You don't know? Exactly. This is why wasting money on brand marketing Cardano is a waste. To market Cardano, we need to market the apps and platforms built on it to the people that need what those apps and platforms offer and support the development of what doesn't yet exist. This is how you market a blockchain, folks. Seeing VeChain and shit like that on UFC fight mats, that's cool for people that already know what VeChain is or for the holders of it. But for anybody outside of blockchain, they have no idea what VeChain is, nor do they care. And they're not going to run out and like research it on Google to try and figure out what is that VeChain thing I saw on a fight mat last Saturday. Nobody cares. Brand marketing is something you do when you've effectively established your brand, which Cardano is not an established brand to anyone outside of the crypto space. If you've been in crypto for a little while, you know about Cardano. But even the people in blockchain that know about Cardano still don't really understand everything that it does or what that it's capable of. And I feel like in order to effectively demonstrate or to show that or to educate people on it, we need to show people in a way they understand its value. doing, playing Doom on Hydra, where everything that happens is a transaction on Hydra. That's cool. But even that still doesn't necessarily translate to non-tech people. You know what I'm saying? So I really believe that to truly build Cardano as a household name, we need to really take the major quality projects, the World Mobile Tokens, the Iagon, stuff that plays a book.io. I think that's a really big deal. I don't talk about book.io enough, but I think what they're doing is absolutely fantastic. But I think we need to start helping to market these applications and these platforms, services, offerings to the general market that would benefit from their use, and then educate them on how to use them. But beyond that, we need to be able to structure these applications so that anybody out there that doesn't even necessarily know anything about blockchain can effectively use it on their phones, on their computers, without having to deal too much with wallets or because there's an intimidation factor with crypto and any newcomer. And we need to really escape that, or build that bridge to newcomers and make it easier for adoption, and then guide them where to go and what they can do in the ecosystem that would benefit them beyond just meme coins and NFTs and stuff. So that's where I'm at with marketing. I see a lot of the posts and things, but just wasting millions of dollars on general brand marketing is not going to help anything. So it is what it is. So until next time, grow your coins. Thanks for joining me. Happy Monday, and I'll see you soon.